Well, after months of waiting, silver finally broke out today. I have been pounding the table on my podcasts and also on the special videos that I've recorded for Schiff Gold to buy silver ahead of the breakout because it appeared to me that a breakout was imminent. Well, now that breakout is history. But the good news is it's still early. It's not too late to buy silver. Sure, it would have been better to buy it before it broke out, but buying it right after the breakout is almost as good. It's a lot better than waiting. Silver closed today not only above $30 an ounce, but above $31 an ounce. It finished the week at around $31.50, although I still see it trading. That's up better than 6.5% on the day. Silver is now up more than 30% so far in 2024. Today's close is the highest price and the highest close for silver since February of 2013. And if you look at a chart, it looks like the price is going to accelerate rapidly from here. That's why I am recording this video. But silver isn't the strongest metal year to date. That honor goes to copper, and it's not even precious. Copper was up about 4% today, not quite as much as silver, but it was up 33% so far in 2024. I looked at the 1970s, the inflationary decade of the 1970s. And if you look at what happened at copper prices from 1970 through 1980, copper didn't even move that much. It only moved up about 90% during the course of that 10 years. Now, that's still a pretty big increase, 9% a year, right? That's a lot of inflation that drove up the price of copper. But so far this decade, since 2020, before COVID, it actually got even cheaper if you measure it from the COVID lows, but I'm ignoring that. If you just look at what's happened from 2020 to May 2024, we're already up 80%. This decade isn't even half over. A lot of people say this isn't the 1970s. They're right. It's not. It's much worse than the 1970s. That's what copper is telling you. In fact, if I look at a chart of copper, I think an explosive move is coming. We may even get to $10 a pound. It closed over $5 today. Think about 508. At $10 would represent a double from where it is right now. But looking at the chart, I think that kind of move can happen. It may even happen as soon as next year. But even if it takes another 2 or 3 years for the price of copper to double, that is a huge move. And believe me, if copper goes to $10 a pound, silver is going to $100 an ounce, probably higher. And that means $31.50 is still cheap. If you don't buy the breakout above $30, you may end up buying the breakout above $50. That could happen soon. So I wouldn't wait. I've been talking to the guys at Schiff Gold, and they've been telling me that a lot of our customers have been waiting for a pullback. Now, if you've been listening to my podcast, I've been advising people not to do that. It's not worth it. Any pullbacks are going to be short and shallow. It's not meaningful if you are a long-term buyer. Like if you want to trade silver or gold, day trader, oh, sure. Yeah, you got to be more strategic, look for pullbacks. But if you're day trading or even short-term trading, you shouldn't be buying any physical silver or gold. Open up a commodities account, trade futures, or buy an ETF at a discount broker. That's what they're for. They're for trading. You don't trade physical gold and silver. The transaction costs are too high. What you do with physical gold and silver is you buy it and you keep it. And you keep it until you need it, not until you sell it. A lot of people are going to need their precious metals, especially their silver. They're going to need it because it may be the only monetary instrument that other people may accept in exchange for goods and services. We have a real currency crisis. We have hyperinflation, which is a distinct possibility. How are you going to buy stuff? If we end up with price controls, which I think may come, there's going to be shortages. There's going to be black markets. How are you going to buy stuff on the black market? It may be that silver is what you need. So you're not actually going to sell your silver. You're going to use it as money. And one of the best monetary silvers is junk silver. If you don't know what junk silver is, those are U.S. coins minted by the United States that circulated as legal tender. Up until 1964, all dimes, quarters, and half dollars were made of silver, 90% silver to be exact. In 1965, they took the silver out of the currency or the coins, and they replaced it with nickel and copper. But pre-1965, you get silver. And they sell junk silver in bags. And they call it junk because it's circulated. You can buy uncirculated dimes or quarters or half dollars, and they cost more because they're more for collectors. If you just want the silver that's in the coins, then you buy the junk silver. And they sell it by the bag. A full bag is $1,000 face, not 1,000 ounces of silver, but $1,000 face. And you can buy it in fractions of a bag. We're running a special at Schiff Gold over this weekend. So you can call. Don't even wait till Monday. You could do it over the weekend. We're going to be selling junk silver at $1.79 over spot. This is a very low price. And in fact, looking at the premiums, historically, junk silver is cheap. It's cheaper over spot than it normally is. I expect that to change. I think the move up in silver is going to attract a lot of demand, and there's not a lot of supply of these bags. So while there is some, you should contact Schiff Gold. If you want to get $50, and they're nice looking coins. You get the Kennedy $50, the Ben Franklin $50. You can buy those, but they're actually 50 cents an ounce extra, more than a dime or a quarter. The dimes are a pretty good deal because if you want a really small quantity, they're perfect for barter, and they don't cost any more. The reason that the $50 are more expensive is they didn't mint as many. There's not as many $50 around as there are dimes and quarters, so it's all a supply and demand situation. Plus, people like the $50 just as a solid coin, and so you're going to pay more if you want to get them. But the key is to get them before the price and the premium go much higher. Every time we get one of these strong Fridays, I think maybe over the weekend we're going to get an explosive rally. Sunday night, come Monday morning, we're going to gap way up. We haven't had that happen yet, but it's going to happen. And I think when we get a real big move, because today's move was solid, but it wasn't, the type of move that I know is coming. That may happen Monday. It may not. It may happen on another Monday or any given day. But I think there's a good chance that when gold and silver really break out, it's going to be in Asia, because that's where all the buying is coming from. In fact, if you look at the prices that are being paid in China for gold and silver, especially silver, they're paying big premiums over what we're paying over here. So that's where the buying is taking place. In fact, if you look at investors, both in the U.S. and Europe, they've been net sellers. The ETFs, the gold ETFs, have had net outflows for the last 11 months. Now, I don't know so far for May. Maybe it'll change because this month isn't over and we don't have the data. But for the prior 11 months, investors that buy ETFs have been selling gold the entire time that it's rallied. Gold closed the day up $40. It closed at $24.15 approximately. $40 an ounce on the day. This is the highest close ever for gold. It's the highest weekly close ever because we happen to be at the end of the week. It's not the highest price ever because back in April, intraday, we traded as high as 2,430. We didn't close there. We sold off quickly. That was about, early in the morning. Today, we closed higher than we did the day gold set that all-time record high. I think that's extremely bullish. The charts look phenomenal for gold, silver, and copper. Also, platinum and palladium have been moving up as well. I mean, it's the entire metals complex that has been rising. Recently, Jerome Powell said he doesn't see any evidence of stagflation. He sees no stag. He sees no inflation. Well, he's clearly not looking at copper, not looking at silver. Silver is an industrial metal, but it's also a precious metal. Copper is more of a industrial metal. I think what's happening in silver and copper is even more indicative of inflationary pressures building than what's happening in gold. The big buyers in gold have been the central banks. They're not buying any silver. They're not buying any copper. This is being driven by inflation. And it's not investors who are buying. They should be. But this is real buying from the real economy. Now, sure, gold is an industrial metal too. It's used in industry, just not nearly as much as silver because the price is too high. So they use silver instead. And in some cases, silver is too expensive, so they use copper. But these are very important metals, and they are flashing an inflationary warning that the Fed is oblivious to. The same thing with the weakness in the economy. We have been overwhelmed with economic data recently of weakness in the economy. And Powell doesn't see that either. Everybody is delusional in thinking we have this strong economy and inflation is on track to return to 2%. We have a weak economy. The only thing that's strong is inflation. And prices are about to start to rise far more rapidly in the near future than they've been rising in the recent past. So the key is before the investment community wakes up to what's going on, you want to buy precious metals. And if you look at the action in the mining stocks, which I'm very much involved in, I have most of my precious metal exposure personally in mining stocks. And that's because I'm so bullish on gold and silver that I want to own the companies that not only mine it, but that have it in the ground. Because when you own a mining stock, you own the gold and silver that is in the ground, that the mines own, that they're going to bring out of the ground in the future when the price is even higher, and they're going to sell it and they're going to make a ton of money. So I've been so bullish on gold and silver that I've loaded up on mining stocks. Now, over the last 10 years, in general, buying physical gold has actually been better than buying the mining stocks. The reason for that is the entire rally, investors have remained skeptical. They don't believe it. Investors expect gold and silver prices to fall. And so they don't want to buy gold and silver mining stocks because they expect earnings in the future to fall because they think gold and silver prices are going down. This is the most unloved precious metals bull market in history, which means it's got a long way to go. It's not even close to a capitulation. What we need is the precious metals bears to capitulate. That has to happen. We need to see investors who have been shorting gold mining stocks or just avoiding them to buy them. Because even though the GDX and the GDXJ, which are indexes of gold and silver mining stocks, even though both of those indexes closed at 52-week highs today, they're a fraction of their all-time highs. And the GDX was up a little over 3% today. GDXJ maybe 4.5%. Those are big moves, but they're not nearly big enough considering what's going on, considering where the price of gold and silver are right now, where they closed, and where they're likely to be in the near future. Institutions are not buying these stocks. And what that tells me is that prices are going to keep rising until they do buy. Gold and silver prices, I think, are not going to have any meaningful correction that represents any kind of buying opportunity until the price is high enough to cause the bears to capitulate. And we're not even close to that moment. We haven't had big short covering. We haven't had a big influx of buying. We haven't even seen gold and silver stocks get upgraded. Nobody is putting buys on stocks that are holds. Nobody is reiterating or raising their price targets. Everybody on Wall Street is oblivious to what's happening. I don't know if they're intentionally not noticing it or they just literally don't notice it because none of these stocks are on anybody's screen. Nobody even cares about gold and silver. Maybe they talk about Bitcoin, and that's been a big distraction to prevent people with seeing what's happening in real gold because they've been fixated on fool's gold. Well, the smart money has been buying physical gold and silver underneath the radar. And so I recommend that my clients take advantage. Again, the guys at Schiff Gold are going to work all weekend so that you can buy before the open on Monday. Now, maybe gold's not going to take off, but you know what? Doesn't matter. You got to buy it anyway. But who knows? Something could be going on. Something big could be happening in Asia. And maybe, just maybe, while Americans are enjoying their Sunday, you're going to see an explosive rally overnight. And they wake up Monday morning and they're going to see much higher prices in gold or silver. I'd rather buy mine now and own it than be surprised by not buying it and have that happen. Because even if it doesn't explode on Monday, you got it. I don't see significant downside from here. Maybe silver's never going back below 30. I don't know. Maybe we have support just below there, but we're at 31.50. What difference does it make? Again, when silver is at $100 an ounce, is it going to matter if you bought it at 31 or 29 or 28 or 32? No, it's not going to matter. What's going to matter is if it's at 100 and you still haven't bought it because you're waiting for a pullback. There's no reason to wait. Just call up Schiff Gold and they will recommend or help you with the junk silver, with the special that we have. And of course, you could buy anything. You don't have to buy the junk silver special. I just think that it's a great time to do it. If you don't have some, you should get some. And if you have some, it's an opportunity to buy more. But you can also buy gold, on this breakout. It's the first time ever closing above 2,400. Eventually, $2,400 gold is going to be very cheap. And so before it is, you want to buy it before we get a real expensive price. People think the current price of gold is expensive because they don't have the perspective. They're just looking in the rearview mirror and they're looking ahead at what the prices are likely to be in the future. And again, if you are more speculative, gold is a conservative store of value. It's a safe haven. If you want to look at the opportunities of mining stocks, if you don't want to buy just gold and silver at Schiff Gold, but you want to own the mining companies that have the silver and gold in the ground, then contact the representatives at Euro Pacific Asset Management or look into the Euro Pacific Gold Fund that can be bought no load at any of the major discount brokerage houses. That's it for now. Enjoy your weekend, and hopefully you take advantage of our special. And worst case, you prepared for something that didn't happen immediately, but that will happen ultimately. But best case, you got in just under the wire. Bye, everybody.